There are currently ongoing talks in the US to increase the corporate tax rate from 21% to 28%. The motivation for that is to pay for the increased government spending. High-tech companies are very versatile and can move their affairs from one country to another, can lock their revenues in one country or another, and have many ways to deal with this tax increase. So the real question should be asked, according to Professor Damodaran, is what is going to be the effect on the effective tax rate? What is the effective tax rate? It is different from the corporate tax rate. It could be higher and it could be lower. It could range from 0% according to Professor Damodaran and get up to 100% and higher. So it has a very wide range. So what could corporates, and especially big corporates, do to avoid this increasing of tax, of these talks about increasing the tax from 21% to 28%? Basically, one of the ways is to delay the revenue, basically to lock it. If you have a revenue and it's locked somehow, meaning you should not pay tax for this revenue, so you could increase these locked revenues, for example, by not paying dividends and not spending it. Second way to avoid this increased corporate tax rate or to get a lower actual effective tax rate is to take loans. And in this way, if a company has a higher tax to pay, it can take then loans and then deduct. Say, I have to pay back these loans, so I have some deficit and I could deduct the revenue from the loans that I'm taking. So actually you could see that the effect would be even more money to the companies because they would take additional loans. The third way to avoid this increased tax rate is to leave income outside of the USA. Basically, what happens is that if a company has an income and it's moving it to the US, then it has to pay taxes. And recently, the companies also had to pay taxes for revenues which they get outside of the US. And they use it, and there is a lot of debate whether they should pay taxes only when they move the money to the US or even when the money is received outside the US and not even moved inside the US. However, in this gray line of when should companies pay taxes, then if there is any availability to the company to leave the taxes outside of the US and to pay less taxes, they could do this. So we've seen a couple of ways for companies to lower the effective tax that they pay, although the actual corporate tax rate would increase from 21% to 28%. Basically, the common thread among all these methods is trapping the cash outside of the US, locking the revenues, taking loans against the revenues. You trap the cash. This does not mean that the effective tax should always be lower than the corporate tax, because it can change in some crazy way, because when they play with these taxes, it can be higher or lower than the corporate tax, so they could even pay higher taxes. Another way that especially high-tech companies are doing is simply to invest in R&D, because the more they invest, the more they have expenses, then the lower the taxes that they pay. And investment is in R&D is almost the whole purpose of high-tech companies. Yes, they are a business and they make money, but without the R&D that facilitates the products especially in the software, with only the output of the companies is bits. It's pixels on the screen. So especially in these cases, the R&D is the main expense and main role of the company, and without it, the company would not survive. So as companies invest more, and investment in R&D is very high in high-tech companies, then the lower the taxes that the companies would pay. So then Professor Damodaran asks, what is the best way to really increase taxes on corporates? Because if we see that if we just increase the corporate tax from 21% to 28%, then the companies do all these tricks of locking the revenues, taking loans, investing more internally, and deducting all this from the tax and paying effectively lower taxes. Then what is the actual best way if you really want to get more taxes from high-tech companies? So the way to do this, he answers, the way to really increase the tax rate on companies is to remove the tax deduction. Because then you take the carpet out of the deductions for these companies. They now want to deduct taxes, but they can't because you passed a law that prohibits them to deduct taxes. And in this way, you leave the corporate tax rate on 21% and you get more taxes because you don't allow them to deduct taxes. So the effective tax rate increases. So if you want to actually increase the effective tax rates on companies, then you decrease the ability the companies to deduct the taxes instead of just increasing the corporate tax rate from 21% to 28%. And in this way, you would get higher taxes. However, when you get these higher taxes out of the companies might leave you because we live in a global economy, and they might open branches outside or just completely leave the country that increased the taxes. I think this was very interesting. We have seen that corporate tax rate does not mean an immediate increase in tax that companies pay. Companies actually pay an effective tax after all the deductions and all the tricks they pay. If you really want to increase the tax on companies, the effective tax, then you need to decrease the abilities of companies to do deductions. And if you really achieve it, then companies will leave you. I think this was very interesting, and see you next time.